Oh man, welcome back to another market closing live stream. We've seemed to have some semblance of normality in the markets. Bitcoin holding up pretty strong, close to 85,000. Normal markets, the traditional markets, seem to have put some of the tariff fears behind them. Let me just mute that. And it looks like we're now ready to move higher on Bitcoin. The question is, have we bottomed? This is the question on everybody's mind. Are we finally through the worst of it? And can we start to build some momentum? Can Bitcoin start mounting an attack back at 90, back at 110, which was the previous all-time highs? Can the traditional markets move? We're going to take a look at the charts and spend some time analyzing this. Now, of course, today was dominated by the news on the story. If you haven't watched my video from earlier today, the morning live stream, plus the video I put out, go watch that. It's been an incredible day on this project. This is a token I invested in, right? Down 82% in a single, it was in an hour. Let me just show you the hourly candlesticks here. Boom, 75.9% gone in a single hour. If I show you that on the daily chart, yesterday when it happened, 83% down. Today, bleeding another 47%. Horrific. I covered that off in the videos earlier today, so make sure you go check that out. Now sitting at 52 cents, guys. $6 billion wiped out. But let's ignore that for now. Let's look at the rest of the market. Bitcoin keeps touching 85 and then settling back down again. Initially, when we opened up, and with the Asian markets and the UK markets, Europe markets, we were doing well here on Bitcoin. We were strong. Altcoins were stronger than Bitcoin as well. Bitcoin dominance was slightly in the red today. But I did predict when I came off that live stream that it'll probably reverse when the US markets open, that we'll probably see a little bit of a calling off. Now, we are seeing that, right? The S&P in the pre-market was nice and red. The daily candle, was green. You saw this jump up in the pre-market. But the day has been red, right? You can see that in the day, we've given up some of those gains. We're still up on the close on Friday. We're still up, but the day was red in itself. And same you can see on the NASDAQ here. Gap up from the pre-market, which was green pre-market, and then kind of given up 1.3% during the day so far. And we're heading into the close now, just 23 minutes left before the traditional markets close. Let's check in on the liquidations over the last kind of 24 hours here on crypto. $338 million getting wrecked. 200 of those are long. 134 of those were short. And again, just a reminder just to stay away from leverage, particularly in an environment where one tweet from, Donald Trump on his Truth Social account and the market's moving in the other direction. So this is a super duper flip-flop market. 1 minute it's tariff, next minute it's not. It's 120%, it's 145%. Oh, semiconductors are exempt. Oh, no, they're not exempt. It's that kind of a market. So in this type of market, you don't want to be in leverage. You don't want to be in margin. You just want to have those safe plays which you like, and if the market goes down, you're confident buying the dip. Now let's do a little bit of analysis here on Bitcoin. Let's take a look at the weekly chart specifically, bring out that EMA ribbon, and you will see that last week's candle close on Sunday, which was yesterday, was super important, right? A majorly important candlestick. When this week opened up in the red and we fell all the way down here, down to those lows of 74.4, I said, guys, watch out, right? If we close below this weekly EMA ribbon, we lose the trend. But until then, we're hanging in there. And it's interesting how if you look at the wick of this candle, which was when we hit that previous all-time high of 73.8, it perfectly coincides with the wick on this candle. So that is now our retest. Right? So the argument which I was calling for, which is that we went here, we struggled, we finally broke out, and I kept even at 110. I was saying, guys, we've not even back tested the previous all-time high. I was referring to this level here, right? 74K. And I kept calling for that. We've now touched that pretty much to all intents and purposes. That is a retest. So we could now have the reason to bounce from our EMA ribbon, bounce from this previous resistance turn support area, and start heading for another attempt back towards 90, 100, 110 beyond. But of course, all of this is destined around the Trump situation. But all the signs seem to suggest that the rough play of Trump is over. It's in the past. And, he wants to now flip-flop into a more amicable approach, into more of a negotiation approach. He's done his scare tactic, and now he just wants to appeal to reason. That's what it seems like now. Hopefully that happens. We've got this pause for 90 days. Hopefully in the first 30 days of those, we see significant progress. I hope we get updates at least within this week, if not next week, which are positive. And as those positive updates start to come out, I feel like we can get some positive momentum here in the charts. Now, in terms of, the wider markets, what about altcoins? Well, altcoins will only respond when Bitcoin responds, right? It's going to look to Bitcoin to bounce, to show strength. And then I think there's many altcoins here with pent up price action ready to run. I mean, we saw that day when the tariffs got U-turned on by Trump when he sent that tweet out, and he moved it just to 10% for everybody. He's just sorry, I'm just looking at the chat. Let's see what we got in the chat here. Pity, are you still eyeing the 76k to 72k? I'm just explaining that now. I think that is your retest. We did touch down to that 74k level. I mean, the perfect level would have been 74 to 72 because that's where you had the candle body closes, but you don't get perfect retests, right? You get retests in regions, and that is definitely defined as a retest. Now, the only reason I see us going down further is if, the continuation of the tariff drama, more issues with China, more escalation in terms of that trade war, or anything else, right, causing some problems, maybe fears around inflation, those kind of things coming up. Now, speaking of inflation, I did want to just touch upon this. We had Fedwala speaking earlier today, and we've got a host of Fed officials speaking this week, right? I'm going to ignore most of them unless there's something pertinent being said, and the main one we need to concentrate on, which I may even include in the live stream, is on Wednesday when Jerome Powell addresses the markets again. Markets are looking to, is he going to cut rates? Is he going to help this economy? What's he going to do for banks? I mean, we know the US 10-year is still in a bit of a pickle, sitting here at 4.37. You would have expected this to come down. Well, when I say you, I mean Trump would have expected this to come down. Still, spiking to the upside and proving difficult to bring back down here on the yield. And again, this is a flight away from US, right? When you see the dollar index struggling like this to the downside, when you see the US 10-year yield going up, remember, yield goes up, price goes down, which means people are dumping US government bonds or not buying enough of the US government bonds. And that normally means that people are losing confidence in the US as that safe haven, as that risk-free rate. Now, typically, one of the options that you have here is for the Fed to continue to buy these bonds, right? The Fed can come out and announce bond purchases. They can equally make money available cheaply to banks on the premise that they go and buy these bonds. Those are liquidity introducing mechanisms that the Fed have at their disposal. So again, we'll see how that plays out and whether Jerome Powell gives any clues on this. The main sentences you'll be looking for is him saying, look, I'm willing to do what it takes to protect the market. Maybe he'll say something along those lines. Now, coming back onto Fedwala, what he said here was that he sees the tariff inflation impact as transitory, which is a little bit worrying because we've heard this word before, right, through the pandemic. Look at what he says. Federal Reserve Governor Christopher Wallace said Monday that inflation from Trump tariffs likely will be transitory and indicated that interest rate reductions are still on the table. In a speech delivered in St. Louis, the central bank official broke down tariffs in two scenarios, one in which they are higher and longer lasting, and the other whether they are negotiated lower. In either case, Wallace said rate cuts are likely to boost growth under the higher tariff scenario or as a good news reductions under the reduced level. Okay, so let's repeat that. In either case, Wallace said rate cuts are likely to boost growth under either the high tariff scenario or as the good news reductions under the reduced level. I can hear the house already that this must be the mistake given what happened in 2021 and 2022, but just because it didn't work out once don't mean you should never think that way again. He's referring to the transitory, and he's taking the words out of our mouth, really, because that's exactly what I said when I saw the word transitory. I've seen Jerome Powell use it to describe the inflation during this tariff process as well, and I'm always worried when I see this word being used by the Fed, right? They spoke about transitory inflation during the pandemic, and we're still here fighting that inflation 5 years on. Now, looking at the positives, look, inflation has come down. If you look at the data which we received last week, PPI and the CPI data, we've broken the back of inflation. We're well there towards that 2% level. And now, if we get a higher number in the next set of numbers, that's okay. The markets will expect it and they can allocate it to being the tariff effect. Now, that's something that the Fed's going to have to navigate, right? The market doesn't think they're going to do a rate cut. If we just refresh this here, I'll show you the percentage. 16% only of the market thinks we're going to get a rate cut. right? Jay Frank's in the chat. If we get 75K, I'll buy another whole Bitcoin. Nice, nice, nice. I mean, look, you know, these are the asset classes to be buying, right? I mean, Bitcoin sitting here at 85, showing strength despite what we had. We had that crazy period where Trump is going as crazy as he can with, you know, one of the worst days we saw in traditional markets. We covered that off on these live streams, and we fell down to 74, which is incredible. I mean, if you told someone that years ago when Bitcoin was, you know, struggling, I mean, forget years and years ago, even if you just go back to 2022, you're down, I mean, you're low as 15,500 on Bitcoin, right? So when you look at these periods here in 2022, November 22 at 15,500 to now telling someone that Trump did that, the market was having a panic attack, and yet Bitcoin didn't go lower than 74,000. It's incredible how far this asset class has come. Now, granted, your altcoins are wrecked, but that's why I always say to eat your veg. Have a balanced portfolio. Make sure you're not over-indexed on just altcoins everywhere, right? You've got to have a balanced portfolio. Let's now check in on this.
Companies. So they have exposure on the ground in China, but it's an important point to make. U.S. companies such as Nike potentially stand to face a nationalism concern over there, whereas a Lululemon, Canadian-based, Birkenstock that's Europe-based, as well as some other companies operating within China, it's less of a concern.
We'll see you soon. Matt, thank you, as always. Matthew Boss.
Great to be back.
Up next, we track the biggest movers as we head into this close.
Perfect. 15 minutes until the closing bell on the traditional markets. Looks like a red day, but of course, when you include the pre-market, they are slightly up. Bitcoin is up also 1.5%. Bitcoin dominance also now in the green, but pretty much flat. Altcoins can't really outperform Bitcoin just yet in this market currently, which is quite frustrating for a lot of people's portfolios. But again, nice times to accumulate, right? When you got Bitcoin climbing and altcoins aren't responding yet, these are good moments to just say, you know what? Maybe we're bottoming out. Maybe we're showing some signs of strength. Do I get myself back in? Now, speaking of this on the daily chart, we're in this important level now where we're testing this EMA ribbon, right? Last 3 days here, Saturday, Sunday is weekend volume, so we ignore it. Monday now with real trading volume. You can see the volume a bit higher than the last 2 days. Can we get a close above the EMA ribbon, right? It might not be the case today, maybe after the US close into the night, maybe, but 85.9. Call it 86,000. We need a candle close, daily candle close above 86,000 to get our daily EMA ribbon back. And once we do that, that's a really positive sign, right? I mean, that's a really positive sign. I mean, the moment we lost it, if you look, really was this daily candle here. This daily candle on the 2nd of Feb, pretty much once we knew that this whole Liberation Day and tariff drama was going to go on with Trump, this market lost its trend, right? We went into a daily bear trend. And if we can recover it, it'll be huge. I mean, we're showing good strength. Now, if we go down the smaller time frames just to see if we do have the momentum, we do, right? On the 4-hourly chart, we do have momentum. We're above our 4-hourly EMA ribbon. We've broken out from this trend. Let me just show you. Let me zoom out and show you this trend. Let's take off the EMA ribbon as well. This trend here, we've broken out. We've curled over a little bit, and now we bounce. But we're struggling to get that higher high. Right, we're struggling to get above where we wicked down from on Sunday, which was a high of 86.092. Okay, so 86,092 cents is where we're struggling to get above. That just where my cursor is here. So we need to start working our way up. We need a higher high. We need to keep the momentum here on Bitcoin in the 4-hourly chart in order for us to reclaim our daily EMA ribbon. So there's still some work left to do here on Bitcoin. Do I think we bottomed out? I think from a technical perspective, we're at a very crucial bouncing point, and we're showing strength here. So yes, I'm bullish on the way we've responded here on this EMA ribbon. But we cannot be naive to the fact that this market is moving on tweets, right? This market is moving on Trump. This market is moving on Lutnick. This Trump market is moving on whatever his name is, Hessen, Besant, whatever his name is. You know, these trade guys. It's moving on that, right? It's moving on the fact that Xi Jinping can tweet something and affect the markets, what's going to happen with the European negotiations. So, you know, you can't definitively say we're bottomed. I just look at it as a nice risk to reward when you've come down, you've ran past a 110, right, after breaking through the previous all-time high. You've come back to retest it. For me, this is textbook, right? This is a textbook kind of touch and go. Let me just see if I can get a highlighter and draw this for you. So this is your all-time high. You come down, you break, you retest, and boom, this is your next leg up, right? And this is a textbook position to be one trying to nibble at these levels, right? Nibbling here, nibbling here, not buying here, not buying here, right? And ultimately, that's what you want to try to position yourself in doing, is buying those pullbacks. And this is on one of those pullback legs. So anybody who's going and nibbling when you're getting one of these pullback legs, you're doing it the right way. Anybody who's buying on the opposite, which is buying at the extremities, those are the ones that are doing it the wrong way. Okay, so hopefully that makes some sense. Let's see what this chat is saying. Pretty Huff, traditionally summer is when volume is lower. Do you see that this year as well, or do news events change that mindset? Yeah, I think it's more than that. I think you do get periods where it's quieter in the summer because people go on holidays. I get that. But ultimately, you remember DeFi summer, right? That was popping off. Obviously, 2021, Bitcoin went down to 29,000 in summer. 2022 wasn't very good as well. We went down to 15,500 like we just looked at. So yeah, the last couple of years of summer haven't been great. Where were we in 2023? Let me just check. 2023 wasn't great either, was it? July. Yeah, around that 30,000 level. Yeah, so again, I wouldn't plan necessarily for summer. I take the market as it comes. I mean, if you get really positive data and the market's booming, then the market's booming. I think it's important to understand that just like in the traditional markets, crypto is much the same. I think if on the S&P, if you miss the top 7 days, you miss most of the gains, right? It's the same on Bitcoin. If you miss those top days, however many it is, I've not done the maths on it, whether it's 10, 15, whatever, there's a few days in the 365 days of the year where the majority of the gains are coming. And if you're not locked in and you're not in the market on those days, you're missing most of the gains in the market, right? And ultimately, that's how I treat it. So I'm not, you guys know me. I'm not trying to time the market. I'm not jumping in and jumping out. I'm in the market. I'm in my Bitcoin. I'm in my favorite positions. I obviously took my loss on the OM tokens, which was painful, but we keep it moving, right? I'll add it to the scars of the other scars that I have, which is Terra Luna, right? I lost a bunch of money on Luna. I lost a bunch of money on OM, and I have to take my learnings from it. It's not a meme coin. It's a utility project. I like the project. Had partnerships with Damac, one of the biggest real estate companies here in Dubai, $1 billion deal. Many great partnerships. Utility token. You guys know I believe in real world assets. BlackRock, have come out with deep research pieces saying this is $1 trillion industry. McKinsey said it's a multi $100 billion industry. I wanted to have an allocation in the RWA space. I bought some ARM. And I get wrecked, right? That's part of the learnings. Terra Luna equally. I thought an algorithmically backed stablecoin was a good bet. I bought the token. I believed in the project and the ecosystem. It was doing really well in that cycle. And you take your licks. It's part of the industry. Now, does that make it okay? No, it's painful, right? When you lose money like that, serious cash, which you've worked hard for, and it's a decent chunk, it hurts, but you've got to take the lessons, right? And in this case, there were many hindsight lessons that I should be taking from this. Did I pay enough attention to the price action? Did I pay enough attention to the founding team? Did I pay enough attention to doing my due diligence even deeper than I did? And you guys know I do a decent job, right? I do in-depth research, but do even more. Look at the tokenomics even more, right? And don't let yourself get emotive with some of these projects. Could I have taken profit earlier? All these kind of things pass your brain. And it's important to take those lessons. But you can't let it make you trigger shy from the next project because you'll miss the next project. Either you're in this market and you're going to make sensible bets and spread your bets out across multiple different plays, or you're scared. And scared money, you've heard the saying, doesn't really make money, right? You've got to be 2 foot in this market, and either you're in or you're not. Now let's take a look to see if we've got any movers in the crypto bubbles. Let's have a refresh. I mean, obviously the OM bubble will probably it's dropped out of the top 100, so we won't see it here anymore. That's nice. At least I can ignore it. Radium up 7%. Algorand up close to 5%. Casper moving 7.4%. Blast from the past. VeChain moving close to 3%. XMR 6.5%. None of the typical plays really moving. I mean, if we take a look at my list here, Ethereum barely able to keep it up, 2.4% today. Griffin up 1%, AI16Z up 2%, Radium we spoke about 8%, Bonk 5%, Polygon is flat, Chainlink 2%, Polkadot 2%, Avalanche closer to 4%. Avalanche has been showing some strength. To be fair. Last week was 22% up. This week 4% up already, which is quite positive. Algorand showing some strength as well. Last week 12%. This week so far 5% with a strong data here today. Again, Algorand, something I do hold in my portfolio from the previous cycle and haven't sold. What else have we got here? Near Protocol 2.8%. XMR we spoke about 5%. Yeah, that's it really. Those are the big movers here. Bit of a subdued altcoin market because the market's just waiting for some direction on Bitcoin. Now, if we take a look at the dollar index, look at that. Look at that. That is the fear. This is a weekly chart you're looking at. This is a fear of the US dollar as people flock out the dollar. Now, incidentally, if I bring out my drawings, what do you notice? Every time the dollar index goes on a prolonged period of downtime, Bitcoin has done really, really well and goes on another cycle. And that's what's interesting here, is like it's been stalling for quite a while in this sideways pattern. Can it break this support level, which is where we're at now, literally here, and start trending in this direction? And if it does, and that would, by the way, mean, you know, tariffs are going really, really bad, or the US economy is in recession, etc., and the Fed comes out to print, Bitcoin will do well. In that environment, Bitcoin will do well. We are now starting to see the US 10-year come down a little bit, down 2.6%. Again, they're going to want that to come down a lot more, but it is a start. It is a start that at least today it was down 2%. I bet they were worried on Friday. Well, Thursday, it went up 2%, and then Friday it went up another percent. At least it's coming down a little bit, down 2.7%. So Trump will be relieved by that. Let's take a look at the suits, see what the suits are saying.
You know, your standard marginal trade into something like equality, right? When you're looking at a situation like this, and especially something like tariffs, you say, okay, go for non-discretionary, go for higher quality. You know, certain types of industries just hold up a little bit better, you know, what you need, right? Healthcare, for example. I think that's a very marginal, and it's also, there's a lot of noise around trades like that. You know, I'm more of the mind that you should be kind of getting to where, again, if not risk tolerance, also diversification. You know, if you're concentrated, you were making big bets on tech or something like that, which would be understandable, you know, from where we came. I think now's the time to be saying, okay, should I have some international in the portfolio? We came into this year, you know, with this U.S. predominance, U.S. exceptionalism, et cetera, and I think we're kind of seeing the value of why you can't come into it that way, and you're better off being allocated internationally as well.
So that unwind from U.S. exceptionalism, how far into it are we? Are we, you know, a third of the way through, 2/3 of the way through?
Well, we don't know, obviously, where we're going to land on these tariffs, right? And we, you know, 90-day pause is 90-day pause, and let's be honest, we don't even really know if we can trust that. Yeah. So, you know, so being able to do the math around, okay, which countries are going to be better off, which parts of the economy. I mean, we can exempt, you know, an iPhone, but not exempt the parts of the iPhone, right? So it's very hard for the market to price this kind of thing and to say, hey, which countries and, you know, at what place should we be? A natural, if nothing else, academic starting point is to be allocated at market cap weight relative to these geographies. And so if you're finding yourself way off from that, and, you know, because of the last 10 years, U.S. is already a very significant stake. So it wouldn't, you know, you're not allocating a massive amount of your portfolio to international, you know, if you're just even starting with that market cap weight rule of thumb.
All right, Dana, good stuff. Dana Doria, Co-Chief Investment Officer over.
All right, guys, so we are now 2 minutes away from the market close. S&P coming off its best week since 2023, like you can see last week. And again, can they kind of pick it up? There's still some tensions around what's going to happen with the tariffs. That's going to continue to fall our crypto investments and otherwise. But the reality is money's ready to come in. I think that's what gives me confidence in this market is I don't feel like the confidence is dissipated. And the main thing that's giving me that confidence, if I show you here on the chart, is this total market cap. If you look at this total market cap, look at this. So you had, when the Trump tariffs took place after that Liberation Day, 170 billion fled, 6% fall, right? And then as soon as the U-turn happened, we got a 6% gain. So the 160 billion came back in. In other words, the money went on the sidelines, but as soon as we got the green light, it came back in. So there's no underlying worries here. And then when we got the positive data around the CPI, and, you know, hopefully we get some good company earnings as well, it gives confidence that, okay, this is an otherwise healthy economy, right? There's no reason for us to be bearish right now. The only reason to be bearish right now is this tariff situation. But this is a situation which could fix itself in 30, 60, maximum maybe 90 days. In which case, is this not an opportunity to buy at depressed prices, right? You need to have your buying the dip hat on. And that's ultimately what I'm doing right now.
They are still performing better than our tech names on a year-to-date basis, thanks to the Chinese AI trade that DeepSeek sparked. Back to you.
Okay, Dee, thank you. Deirdre Bosa to Leslie Picker on what now to expect tomorrow.
Yes, Scott. Tomorrow we get Bank of America and Citigroup, two of the better performers among the big banks today, and the last two to report first quarter results, at least among the big six. The market will be focused on what the earnings say about the state of the consumer and whether these two retail-oriented firms are setting aside more for potential bad loans. Color from the firm's executives will also be critical in terms of whether they're seeing an impact on consumer spending, on credit quality, and loan demand from the ongoing trade war. Also, the uncertainty surrounding rates and the yield curve will have an impact on the bank's net interest income outlook. That's that profitability metric for loan making. And so far, the big banks who have given guidance have held their full year outlook, or in even JP Morgan's case, increased it slightly. So we'll see if that trend continues tomorrow. Scott.
All right, Les, thank you. That's Leslie Picker. Bob Pisani, I turn to you. We'll call 2 minutes. You'll hear the animation in a moment. We'll go out green today, it looks, but not nearly as good, I think, as people expected, given some of the exceptions because of what happened over the weekend with the yes, the no, the this, the that, and now the market is doing.
He's referring to this, what I put up on screen.
Declining stocks is great. Equal weight outperformed. Banks, utilities, consumer staples, an odd group kind of outperforming here. Banks are kind of in the middle. The good news is we've regained 2/3 of the loss. Remember, the market started April 3rd, started dropping on the tariff announcements. We've regained about 2/3 of those losses since then. That's good news. I'll tell you what I don't like. I called my friends, trusted old friends over the weekend. Utter cluelessness on earnings this year. Number one, on the level of earnings, we're expecting earnings to be up roughly 10% this year, $267. Forget about it. Nobody knows what the right number should be. Scott Croner dropped his numbers at Citigroup to 255. So should it be up 5%, up 10%, up 0%? And what's the right multiple? Right now we're trading at 20 times forward earnings. That's a rich multiple. That implies growth in the economy and growth in earnings. That's not going to be happening likely. So should the correct number be 20 times forward, 18 times forward? And depending on what you get, right now we're at, you see 5,400. That's 20 times forward earnings. Look at these numbers here. Up 10%, 267, a multiple 20, you get 5,340. But if you drop the earnings level just a little, instead of 10%, 5%, the multiple is 18. Look, you get numbers that are way down there. And look at these numbers, you get a little more pessimistic. Start talking about a normal multiple of 17. You're down into the $4,000 level. So nobody has an idea what the right numbers could be. That's why you're getting these wild gyrations. That's why everybody's a little bit nuts.
We need one of these for crypto.
We'll get some more bank earnings tomorrow, and then we really get into the thick of it, so we'll see. That's Bob Pisani. Thank you very much. I'll see you tomorrow. I will send it into overtime now. We will be green across the board, certainly off the best levels. OT with David Faber.
Thank you, Scott.
All right, so we end the day in the green on traditional markets, but only just, right? We predicted that perfectly today. I said that, right? We had this morning when we streamed into the opening bell, we were green from the pre-market. But I say, guys, don't be surprised. The pattern through this tariff nervousness has been that the markets do well in the Asian European periods and then tends to sell off into the US Open given the uncertainty, probably because Trump's awake and tweeting and doing stuff. So that's naturally going to weigh on markets.
Off today. Coming up this hour, the confusion around the tech trade. D.A. Davidson's tech analyst is going to tell us how he's thinking about names such as Apple and Nvidia after, of course, a weekend of tariff headline whiplash. Plus, former Richmond Fed President Jeffrey Lacker will be with us. We'll talk about warnings from Janet Yellen and Ray Dalio about the potential economic toll
that could be useful.
Of tariffs and uncertainty as well. And Meta's moment in court, we're going to get the latest on the start of the company's antitrust trial. That has the potential, certainly if the government were to win and it goes.
Okay, so Bitcoin, red candle sticking here, failing to get above that 85 level as the US closed. So maybe the Asian open through the night here can get us to go attack that 85 level once the US are asleep. So yeah, just struggling here short of 85K. And again, on that kind of the question there around Apple, around Nvidia, I'm bullish on those, right? I hold both in my stock portfolio. I'm bullish on those plays. At the end of the day, America's not going to kill two of its most promising companies for this trade war, right? Even if he tells them there's going to be some hardship, he's going to look after them on the other side. And I think that's why you saw that U-turn on the exemption for semiconductors and mobile phones. He's constantly in communication with the likes of Elon Musk. He's constantly in communication with the likes of, Jensen, Nvidia, or Tim Cook and Apple. There's no way he's going to wreck those companies for the sake of his tariffs. But what he's probably told them is, look, there's going to be a volatile period for your stocks. Chill out. I'm not going to get you messed up. We'll be good. We'll be good. And I think he'll probably, play it along those lines. Let's take a look at Sonic. It's been a while since we looked at Sonic in any detail. Struggling to really create a higher high here, of course, given Bitcoin. 50 cents is going to be the key level I'm looking for. Things don't get exciting until you break 50 cents here. These levels, nice buy, really. I mean, if I take a look at this kind of rectangled area around this zone, I mean, this will, in my opinion, turn out to be a really nice buy zone, given the price action we've seen in other periods. I mean, let's just come out. Let me just show you this on a daily chart so you can see it. So if you take this on a daily chart here, look at this. So that's the 50 cent level we were just speaking about. It's struggling around there. Once you clear that level, you can mount an attack to the next resistance, which is 57 cents. Then you got 65 cents. Of course, 60 is always an important psychological level as well. And then 83. So a lot of key levels here for Sonic to face, but ultimately it's just one of the things. If you like it and you want to allocate it to your portfolio, these are nice areas to buy. I mean, you are retraced 50% from the highs of what you saw in just Feb, right? At the end of Feb. So you got this, people forgetting this project was at 99 cents, $1 billion total value locked, a lot of adoptions, NFTs, DeFi, a lot going on, literally just weeks ago. But of course, the Trump and the wider panic is what's led to this 50% pullback here.
Materially lower, because we still are hopeful that the Trump tariff scenario will not be as adverse as Waller pointed out this morning. We are hopeful it's not 25% recession, that whole scenario. We can avert that. And if we can avert that, you will get some downgrade in earnings. But at the end of the day, you still have a functioning economy. And if you get the second half of this, which is lower tax rates on the corporate and household side, and you get some sort of deregulation, it could be enough to keep us afloat, especially when the Fed put does come into play. June might be tough, but we expect 3 rate cuts this year.
You're still looking for 3, huh? Yeah, June may be tough. Yeah. Brenda, let me come to you. And, I think the expectation coming in this morning, even with some of the walkbacks of Sunday, was that we'd see tech have a pretty strong bid. Apple does end up 2%, but Nvidia's down. Amazon, Microsoft, none of them really showing much gains this morning. Does that concern you at all? Excuse me, this afternoon. I'm thinking I'm in the morning still.
Yeah, I think, it's not surprising. This has been... I
do just want you to listen in on this from Eric Trump as well.
Again, that's why I fell in love with crypto. And I truly believe that Bitcoin is one of the greatest stores of value. Immediately liquid, an unbelievable hedge against real estate, and something we're really excited about. Again.
Also, earlier today, you did have Trump meeting President Bukele. I don't think they spoke anything directly about crypto, but of course, El Salvador has used Bitcoin as legal tender in their country. They have a reserve. Trump has now announced a Bitcoin strategic reserve as well, using the coins they've seized from Silk Road. Good to see them having a chat. They really, I saw some of the segments of it. They spoke more about tariffs, and they spoke about the prison that El Salvador has outsourced those American prisoners to. So there wasn't much talk of crypto.
The market has been down, but we've done it in an incremental way with a long-term focus, knowing that we're not sure we've seen the bottom yet. I'm hopeful that we have, but we do think that on days like Tuesday of last week,
we were just discussing that.
It was an interesting day, and one that we felt was for long-term holders was a good entry point to add a little bit more exposure to the equity market.
Your expectation and hope, I guess, is that things will become a bit less haphazard when it comes to the implementation of tariffs. Fair to say. I mean, I assume you can't be. I don't know how much conviction you have in that, Brenda.
Yeah, I think nobody knows, but I do think in our view, we cannot imagine that the goal of this administration is to come in with a bulldozer and hurt the economy for the longer term and to hurt U.S. companies. So I think the way it's been implemented thus far has certainly been more disruptive than we would have expected. But I do think with the postponement that we've seen on retaliatory tariffs and now with these various categories, that does provide some time to fine-tune things a little bit. But it still isn't a period of uncertainty, of course. We won't really know until 90 days from now or potentially earlier and have more clarity. So I think.
And again, just on that, guys, remember we spoke about the fact that we don't need Trump to resolve every single issue in the next 30 days. Ideally, if he prioritizes them, we know that the majority of U.S. trade is done with the top 4 guys, right? Mexico, China, Canada, and then Europe as well. If he can just come up with these deals quicker on the top ones, markets will calm down pretty quickly. We don't need all 75 countries to come to the table and thrash everything out in the next 30 or 90 days. We don't need that. Just if those big guys come and you start addressing them, that is where you're going to get progress in the markets. Equally, if any of those escalate from those top 4 trading partners, markets will panic again. Okay? Very, very important to understand. What's this developing story they're on about?
Well, involving, I guess, tariffs on automobiles, correct?
Let's see the markets.
Yes, a little bit of a surprise there because it came in spite of all the pushback from the administration this weekend that the tariff exemptions issued on smartphones and laptops weren't actually exemptions. They tried to throw cold water on that, but then the president took things a step further today. He suggested that more relief could still be coming. Trump was asked in the Oval Office earlier what additional products might see exemptions, and he replied he was, quote, looking at something to help.
Didn't I just said he'll take care of his friends, Tesla?
Tariff. His comment then pushed the big 3 automakers, all 3, sharply higher to end the day. Trump was also asked about Apple specifically and whether that company might see even further relief than what they got this weekend. Trump replied that he's a, quote, flexible person. So no certainties there, but it did fuel some hope that this list of exemptions might not be the last one. But of course, David, what we still don't know after today is how long relief could last or how widespread it would be. It was just this morning that Kevin Hassett, the economic advisor, said that most imports will still see some sort of tariff at the end of the day, and the White House is also warning that the semiconductors investigation that's still yet to be formally launched, that could be so broad as to hit any items that use semiconductors.
And by the way, that's not the point. It's not about how long this relief lasts for. It's the fact the markets are noticing that Trump is easing up on the gas. He's going into, exemption mindset instead of attacking. I mean, you got to remember, just 6-7 days ago, this guy is putting 46%, 56%, 75% tariffs. He's coming out like the bad bandit. So for it to go from that perspective to now hearing exemptions on semiconductors, exemptions on auto, and the language changing, that's why markets are feeling a little bit positive. That being said, it wouldn't be one of my videos if I didn't show you the other side of the story, which is that China is not going to back down. And I said this from day one. Do not think these guys are just going to push over. Europe will push over. These other countries like Israel will push over. They need the US, right? China, on the other hand, listen to this guy. This guy always speaks very, very candidly, and I want you to hear this.
China is fully prepared to fight to the very end because the world is big enough that the United States is not the totality of the market in the world. So if the United States wants to go in that direction of completely shutting itself out of the China market, be my guest.
Yeah, and China will lose the US market, which, as I've said, is 15%.
We don't care. We don't care. China has been here for 5,000 years. Most of
this is the mindset.
There was no United States, and we survived. And if the United States wants to bully China, we will deal with the situation without the United States. And we expect to survive for another 5,000 years. China.
They're not a joke, guys. They're not a joke at all. And America have to be careful.
To give you some optimism when it comes to the future for the company?
Well, it's a little better than where we were Thursday, Friday, in the sense that it looks like Apple will continue to avoid the crossfire between the U.S. and China. If Apple isn't a matter of national security to either side, maybe they can escape some of the tariffs. So there's still going to be a lot of uncertainty. Apple's still going to have to do a lot to mitigate the impact of the tariffs that will happen one way or another. But it looks like it may avoid the really significant consequences of the very high tariffs that the U.S. and China started talking.
He's not going to damage those companies. He's not stupid. He's a businessman first and foremost, right? He's not stupid. Now, having said that, look at this. This is the victory from politics perspective that you'll hear, right? Listen to this.
And that'll continue at levels that you've never seen before. That's what's going to happen. And even the stock market's up today. It's we also had, we a lot of people didn't say it the way it was. We had the largest gain in the stock market in history on every single category last week. That was a nice game because we were getting a little hit because people didn't understand the power of our country economically if you use it right. Do you have?
And this is literally what you're dealing with, right? You're dealing with someone that obviously took a really healthy economy, gave the markets one of the worst days it's seen in a very, very long time, put us on the verge of, without exaggerating, a very deep recession, if not even use the word depression, right? If he continued with the stance he was taking with those arbitrary reciprocal tariffs, to then come out and celebrate that he U-turned and the markets pumped a little bit, right? I mean, that's what we're dealing with. That being said, Bitcoin here trying to, secure this daily close, although it was much higher earlier in the day. It did go up as far as 85.8, now below 85,000 here on Bitcoin. And again, just waiting for correlation from traditional markets, right? Traditional markets were tentative today. Like I said, we do have some important Fed officials speaking this week. Most importantly is Jerome Powell on Wednesday. I will be streaming that with you guys later in the week. So if you want to cover that off, then make sure you're following on whether it's Kick on YouTube. Make sure you're following so you don't miss any of that. Let me just check the chat. Pity US is an infant compared to China. Trump created the catalyst for the New World Order. Tinfoil hat theory. It's right. It's right. At the end of the day, both these countries aren't stupid. They both rather coexist and they both rather have trade. But when they have to go through this brinksmanship, it's like they have to fight their corner, right? It's like two lions in a jungle. They're both going to pull on the piece of meat, and they both have to prove that they're strong and tough, and it's going to have an impact and consequences on the rest of the world. Normally, usual people like us, regular folk. But ultimately, they'll sit down and they'll negotiate. The problem is how much damage will be done before then. Hopefully not too much is what we hope for. And then we can ride the wave to the upside. Again, just to remind you guys of the big leading story today was ARM, right? Painful day on ARM. Started yesterday, really, this catastrophic dump. I mean, the founder is saying that this was false liquidations by an exchange. They're saying none of the team have sold. Their partners and advisors and investors are saying we didn't sold. Apparently, it was a bunch of investors who had access to large amounts. We're talking over, hundreds of millions of which they were of dollars worth of which they were using as collateral on an exchange, which hit their liquidation price, and they were forced liquidated. And so, you got the CEO, Patrick Mullin, coming out and saying, oh, no, this is the fault of the exchange. We want to look into the legal ramifications of this because he feels like they were unforcibly liquidated. In which case you're arguing that an exchange, and he's not mentioned which exchange, but you guys can probably guess a couple. He's arguing that an exchange has gone out there and eliminated, sniped, killed, executed a top $26 billion project with major partnerships with multi-billion-dollar companies, real estate companies globally. I mean, that's a big claim, right? And I guess the question in my mind, which I shared in the videos and the breakdowns earlier today, make sure you go check them out if you're interested in this crazy story. I mean, this is the big collapse of this cycle, right? This will go down as probably, hopefully there's nothing worse. I don't want to, jinx it. But this will go down as the big collapse of this year, right? The Terra Luna of this cycle, the FTX of this cycle. And it's these kinds of rug pulls that can really trigger a bear market, unfortunately. I mean, these things really put shade on the market and damage the market. I think, fortunately enough, and this is probably an indictment on the project, actually, and one of the reasons why maybe this kind of happened. I don't think the community is as big as, let's say, an XRP community is, as a Solana community is, because the noise after this dump hasn't been as loud as the noise has been post-Solana, post-Terra Luna, post-XRP difficulties, right? This has been very different. So, the price action does look fairly manipulated here. I mean, there probably a lot of insider stuff going on. And I think that's one of the reasons you're probably seeing that some liquidations to that extent on an exchange, right? Wiping a project out. This is unheard of. This, if this was normal, this would be happening every single day on other projects. It doesn't happen. This is not a meme coin. This is not a pump fund coin. This is the utility project. And if investors are being told to come to the crypto space to find good utility projects, and people like myself who I'm not a newbie. I've been in crypto for a very, very long time. I'm investing in these projects. I invested in Terra Luna. I invested in this. And you're taking L's on these projects. It's an indictment on the space, right? This is why you need regulation. Whether you like it or not, crypto will get regulation one day, and it'll be good for the space. It's no different to when the roads got traffic lights. Traffic lights made roads safer, whether you like it or not. Now, if you were a driver pre-traffic lights, you would have loved your life. You were having fun. But some of you got wrecked. Some of you got killed. Some of you lost your family members driving like that reckless. But I'm sure it was fun not having any traffic lights, right? But after a certain period of time, crypto, the fun will stop, the crazy gains will stop, and you will settle down into a post-regulatory world, and it'll be better for the long-term growth. Let's listen in to Bloomberg.
Joining us again.
Good to be with you. Good to be in Buenos Aires.
Yeah.
So this is the guy Besant from the Trade Administration for Trump. He can move the markets. Let's see what he says.
$20 billion agreement with Argentina. But we haven't seen a Treasury Secretary come to Argentina since Trump's first administration, and that was for a G20. So why the emphasis from the Trump administration on Argentina?
Well, Anne Marie, a couple of reasons. The reason for being here today is today's a fulcrum day. So the Milei administration has done 3 adjustments, and this marks the beginning of the 3rd one. So they did a large fiscal adjustment, a large monetary adjustment, and they're doing they announced on Friday a large currency adjustment. IMF has allocated $20 billion to them. The World Bank has allocated $12 billion, and I wanted to come here today to show support for President Milei and his commitment to what I think is historic in terms of.
Why does every U.S. Treasury Secretary struggle to speak?
The trade negotiations. I'm sure you spoke with President Milei about the 10% rate that Argentina was hit with. Do you think at some point that can come down to 0?
Look, I think we're going to start the negotiations, and just like with everyone else, I'm telling them, bring your A game. We'll see what you got, and we'll go from there.
Can any country go to 0?
We'll see. I don't know what's going to happen with the negotiations, because we've got a whole box of things we've got to overcome: tariff, non-tariff trade barriers, currency manipulation, and subsidization of labor and facilities. So there's a big menu there.
There's been an early focus on Latin America writ large from the Trump administration in the first 100 days. Is Latin America policy also, in a sense, China policy for this administration?
Well, I think that might be a good description, because what we are trying to keep from happening is what has happened on the African continent, where China has signed a number of these kind of rapacious deals marked as aid, where they are really, they've taken mineral rights, they've added huge amounts of debt onto these countries' balance sheets. It's undisclosed to any of the other international organizations. They've got tolling arrangements. So they're guaranteeing that future generations are going to be poor and without resources. And we don't want that to happen any more than it already has in Latin America.
China has a foreign exchange swap with Argentina. Would you consider a credit line directly from the United States?
That's not under consideration in terms of, so they have an $18 billion credit swap in RMB. Argentina, under the previous Peronist government, drew down $5 billion, and that will remain outstanding. The Chinese showed very good faith effort after the announcement, or in conjunction with the IMF announcement, so that is going to be rolled forward for a year.
But do you want them to get rid of that swap with Beijing?
Well, I think as this administration continues their stay the course on their economic policies, they should eventually have enough foreign exchange inflows to be able to pay that off.
So less than 2 weeks ago, you and I were talking outside of the White House after what the president called Liberation Day, and you said you weren't part of the negotiations. Now you're leading them. What's changed in these past 12 days?
No. What I said,
Lutnick was too aggressive.
I didn't construct the actual
tariff rates.
The tariff rates. I've always been part of the tariff policy. I had been focusing on tax. Maybe you want to talk about that later. That's going very well.
Yeah, because we know how you calculated the tariff rate. You just did that division which we spoke about to get the number you want.
Going to be part of that, and the president has hit a 90-day pause button, and we are moving quickly with many of our most important trading partners. So we had Vietnam in last week. We had Japanese in on Wednesday, South Korea next week. So it's going to move fast. And but the important thing for your viewers to know is we're setting up a process, and we are going to run that process. It's going to be orderly. And at the end of the day, especially for the most important trading partners, the president's going to be involved.
So when it comes to the current negotiations this week, you're also sitting down again with the Spanish negotiating team, the Japanese negotiating team, and also the Spanish economy minister?
Well, the Spanish economics minister was just a prearranged meeting. He and I have never met. So that is not a trade sit-down. The Japanese meeting is a trade negotiation.
The Japanese prime minister recently said he's not going to rush to get a compromise and a negotiation. How quickly do you think you can see these deals come to fruition?
Well, again, I think there will be advantage to our allies, especially in a first mover advantage. Usually the first person who makes the deal gets the best deal. So
who do you think will be first?
It's their choice.
Is there a handful of countries that you expect to have a deal before the 90 days is up?
Oh, I think there could be numerous countries. And look, it may not be the actual trade document, but we will have an agreement in principle and be able to move forward from there.
So are we talking about a dozen or 70 plus?
Look, I think it's going to depend, but we're going to move with all deliberate speed. And again, it's going to be a process. It's going to be USTR, who just has mountains of data that they've been collecting over the years. Because in a funny way, the tariffs are the easiest part. So a country with high tariffs, you can just say, okay, this, get rid of it. It's the non-tariff trade barriers that are more insidious, more difficult to spot, and it's probably going to take a little longer to exercise those demons.
When you said you weren't part of the rates in that chart that the president held in the Rose Garden, is he taking a maximalist approach? Neil Dudder recently wrote that President Donald Trump has cracked a lot of eggs, and now Scott Bessent, Treasury Secretary, needs to make an omelet. Is that how you view this situation right now?
I view not giving away negotiating secrets on worldwide television as the essence of negotiating.
You recently talked about getting deals done quickly with partners to then confront China together. When you're in these negotiations with trading partners, are you looking for them to offer up something to combat Beijing?
Well, I think combat's an aggressive word, but look, I think now that we have the China tariffs in place, that they are going to want to have some protection from Chinese goods flooding their markets. That China's business model is like from that Disney movie where the brooms are carrying the buckets. Like they're not going to stop manufacturing because the U.S. has a tariff wall up, so those goods are going to go somewhere.
Where do you think they're going to dump?
Well, I think it depends on the good.
We have exemptions now, though, for electronics, so we still expect electronics to come into the United States with the smaller tariff rate, the fentanyl, 20%.
But you were asking where are they going to dump. I think it will depend on what is the good. You know, higher value-added manufacturing goods, likely in Europe, Canada, in the G7, and then kind of more of the baubles and knickknacks in the global South.
China's Commerce Ministry came out when the tariff rates were going above 100% and called it, quote, a joke. Has there been negotiations on any level between Beijing and Washington right now?
Well, look, it'll come from the top. President Trump, Chairman Xi have a very good relationship. And I wouldn't say that these are not a joke. I mean, these are big numbers. I think no one thinks they're sustainable, wants them to remain here, but it's far from a joke.
Well, they just say that the rate is so high, it's become a joke. Basically, does it just stop trade between Washington and Beijing altogether? Do you see a decoupling of these two economies?
Well, maybe the trade minister has a different sense of humor I do, but I don't see anything funny about it.
Do you see a decoupling, though, between Washington and Beijing?
There doesn't have to be. There could be. There's a big deal to be done at some point, but look, what is different with China that is different in the history of trade, that normally, if you go back to the big trade deals or the currency deals in the 80s, the Plaza Accord, the Louvre Accord, the Reagan auto deals, our leading economic competitors were our military allies. China is both our biggest economic competitor and our biggest military rival. So that's going to require a special kind of formula.
Are you teasing out a Mar-a-Lago Accord that we should be paying attention for in the future?
I'm not sure what you're talking about.
Well, potentially getting all these trading partners together to discuss fair, balanced trade?
Well, we're doing that over the next 90 days.
Okay. So shifts in tariff policies has had markets on edge. Even the president recently remarked that the bond market was, quote, queasy. Do you have a sense of who is dumping U.S. assets? Who's been dumping U.S. treasuries?
I don't think there's a dumping, and I think we saw in the tick data either today or Friday that actually foreign ownerships picked up. We had three big auctions last week, and on the longer end auction, 10-year, 30-year, we saw increased foreign competition. So I actually think this is one of those occasional VAR shocks that you get in the trading community. I think a lot of people got very leveraged, maybe out over their skis, and then you combine that with some real money selling, and you get these moves.
So you don't think it's sovereigns, potentially it's hedge funds unwinding?
I have no evidence that it's sovereigns. And look, Anne-Marie, not you, but the nature of journalism is to create a headline that 10 days ago, when 10-year yields hit 3.90, said, well, Secretary Bessent got what he wanted. He got 10-year yields down, but it's the wrong reason. Now, I forget what they hit on Friday, maybe 440 something.
We saw a 50 basis move last week in 10-year yield. At the same time, the dollar was weakening nearly 3%. How do you simultaneously look at that situation? It feels like investors are dumping U.S. assets.
Well, look, I've learned that not to look at what happens over a week. Right? Like, I, for better or worse, have lived through a lot of these things, and in trading, in one's personal trading history, it's the scar tissue that sticks with you the most. I can tell you exactly where I was standing in 1998 when the long-term capital, the debacle happened. That had nothing to do with anything other than a bunch of geniuses up in Greenwich who had too much leverage.
So you're not concerned at this moment about the U.S. dollar or the U.S. Treasury losing safe haven asset?
No. Look,
we're still a global reserve currency.
We are still a global reserve currency.
That's obvious.
We have a strong dollar policy. The dollar can go up and down. If you go and look back at President Trump's first term, I don't remember the exact number, but the dollar in 2017 went down, I can't remember, 7, 8, 9%, and then once the tax bill was done, took off for the remainder of his term.
Have you spoken to the Fed at all about contingency plans, though, if financial stability risks flare up?
Chair Powell and I have breakfast every week, and we discuss a wide range of things. And our staffs are always in contact. We have a markets room, they have a markets room, but and specifically, did we discuss some kind of a break the glass? I think we're a long way from that.
So when was the last time you guys spoke? You had breakfast last week?
We had breakfast last week, and it was an away game. I was over at the Fed.
And no concern so far from the Fed chair and what he saw in the Treasury market?
I think we would have heard from the Fed chair. I think we heard from Governor Collins of Boston on Friday. We heard from Governor Weller today on his thoughts on what tariffs mean. So it seems like business as usual.
When it comes to the Fed chair, his term is up May 2026. Mm-hmm. So we're almost 12 months out from that. When are you going to start to think about, have these discussions with the president about who should lead the Fed?
Well, we think about it all the time. I think when are we going to start interviewing candidates, and that'll be sometime in the fall.
In the fall, so about 6 months lead time.
Yep.
The U.S. Supreme Court recently came out with a ruling that the executive branch, the president for now, could oust top officials at independent agencies. And that has some individuals in the market a little bit concerned about what this could mean for the independence of the Fed, which is really a cherished pillar of wanting to invest in America. Do you have any concern about potentially President Trump ousting Fed Chair Jay Powell or the independence of the Fed?
Well, and Marie, I've repeatedly said the Fed has two duties, and I believe that monetary policy is a jewel box that's got to be preserved, and then they have regulatory policies, and I think we can have more of a discussion because the Fed is one among three bank regulators. There's the Fed, Controller of the Currency, and the FDIC. So I think it's very easy to delineate between those two.
So at the moment, no concern?
No concern.
When you talk to Fed Chair Jay Powell, at the moment it doesn't sound like they feel like the need to step in on this unraveling we saw last week with the bond market. Does the Treasury have any plans to do something if this was to become more unnerving? Well,
look, the Treasury has lots of things we can do, and but again, I think we're a long way from that.
But all options would be on the table?
Sure. But again, we have a big toolkit that we can roll out. We do regular off-the-run buybacks. We could up the buybacks if we wanted. So.
Just finally, I want to get your thoughts on something you told me, John, and Lisa in February, which was that in your old world, you would be that person with your ear against the door trying to understand what policymakers were doing so then you could predict where financial markets would go. In this moment where we hear from top executives constantly, today it was the Goldman Sachs CEO, last week it was Jamie Dimon, and this uncertainty, especially around tariff policy, what advice would you be giving to your old self?
To look at the whole policy because, again, not you, but others in the media can pick one factor. So right now it's tariff, but we have you mentioned we have tax coming up. We have deregulation. So it's a the leg stool, and I would try to think about what's happening. The tariff sequencing was always going to be first. The tax bill's going very well, and I think I've been pleasantly surprised at how quickly that's moving along. And then deregulation from our area on the financial side and in the rest of the economy, that takes a little longer, but that will start kicking in September, October, in the fall, and those are going to be very powerful.
I believe you described as a three-leg tool, and right now everyone is focused on one part of that leg, and that's the tariffs, as you say. But when it comes to the tax cuts, right now what the market is expecting and what could get done in Congress based on how slim the majority is for the Republicans is just an extension of current policy.
I think that's wrong. I think that the underreported story in the media, the story that's fun to report, doesn't get reported enough, is the Democratic chaos, but the underreported story is the remarkable Republican unity led by President Trump. Speaker Johnson, on first try, got instructions out of the House for the budget. He passed a clean CR first try. Leader Thune pinged it back to the House very quickly with their instructions, and I had something along with Kevin Hassett, had an NEC chair called the Big Six, which also includes Leader Thune, Speaker Johnson, Senator Crapo, Committee Chair Jason Smith, and everyone's very aligned, and there's going to be a lot more bells and whistles other than just changing the date on TCJA.
So your pitch right now to financial market participants, to consumers, is you need to see the entire picture.
You need to see the entire picture, and as President Trump said the other day, stay cool. It was my message when I was out with you on April 2nd. It was to the countries. These are maximum rates, so you ask if it was a maximal strategy. If you don't elevate, this is your maximum rate, so don't elevate. You have, in markets, the upside barrier. You don't have unlimited risk, and then come to us, and we will negotiate in good faith.
Can you guarantee clarity in 90 days?
I think clarity is through the eye of the beholder, but I can guarantee you that we're going to run a robust process, and I think the market can take great comfort in that.
So maybe some of that uncertainty starting to evaporate.
Yeah, if we measure uncertainty by the VIX, I think that the VIX, I don't want to make market calls, but I think that the VIX spiked and is likely peaked.
Secretary Bessent, we really appreciate your time. Of course, that was Scott Bessent, the U.S. Treasury Secretary here in Buenos Aires, and his pitch to the world.
All right, guys, I feel quite good listening to that. I feel really positive after listening to that. I feel like, you know, we're seeing some rationale, we're seeing some reason, and it looks like we're through that worst gamesmanship, brinksmanship bit. Now, bar, you know, countries not sitting down sensibly, and bar the China-US issue, which we know continues to play out, we pretty much have a semblance of order now. We've got a plan. Remember, as investors, it's not that we want good outcomes or bad outcomes. It's we want certainty. We want direction so we can place our bets accordingly. And I think now that we've got this 90-day U-turn, right, putting everyone on 10%, and they're going to negotiate and hopefully make progress over the next 30 days, I think to answer the question of is this a bottom, I mean, high probability it is, right? Which is why I'm happy to buy the dip in these levels. You know, we may not get lower prices. If we do, again, always keep cash on the sidelines ready to buy a little bit more, but I certainly wouldn't be, you know, greedy waiting for a bit more. Just, oh, can I get to 82? Can I get to 80? I mean, if you like, you got to at some point get yourself in the market. And for me, I feel like we're through the worst of it. I think the VIX spiked, like he just said there. I feel like Jerome Powell came out with his opening gambit, which was the higher level of what he wants to do. And I think things will start to settle down now. People will come to the table. They'll negotiate. The China-US thing might continue, fine. But again, at some point, I see them sitting down and having a sensible conversation, and we can move forward. Thanks for joining me in this live stream, guys. Hopefully you enjoyed it. If you did, smash up likes. Don't forget to subscribe, and I'll see you in the next one.